On Wall Street, stocks took another nosedive today over fears in the banking sector. The Dow was down more than 700 points, or more than 2%, before recovering some of the losses late in the day. The head of the Senate Banking Committee says he plans to hold hearings on the problems in the banking industry. We get more now from CBS's Errol Barnett.
It was another volatile day on Wall Street. Stocks tumbled, dragged down by losses from the big four U.S. banks, following more troubling financial news, this time involving one of Europe's largest banks. Credit Suisse shares fell 24% today over funding concerns and the discovery of material weaknesses in its business. How concerned should Americans be based on what they're seeing happening in Europe right now?
The issue with banking is that so much of it is relying on confidence. And we have to really look out for what are the other potential dominoes that could tumble if Credit Suisse comes under continued pressure.
Larger U.S. banks have been flooded with new deposits after the sudden collapse of SVB. Bank of America reportedly received more than $15 billion. J.P. Morgan has seen billions flowing in as well.
I immediately looked at a larger bank.
Anthony Coombs, who founded a mail-order underwear company in Santa Monica, moved most of his money out of SVB to a bank he says is too big to fail.
The first thing I did, I had never done this before, is I went online and saw total amount of assets each bank held. Because really the end goal here is, do we think this bank will go under?
While in Washington, lawmakers want SVB's executives to be held accountable.
Well, they almost cratered our entire banking system. They paid themselves bonuses, even as their bank was collapsing.
Channeling that frustration, Senator Blumenthal and other Democrats have introduced legislation aimed at failing banks. If passed, it would claw back any bonuses and profits earned from stock sales within 60 days of a financial firm's collapse. Norah?
Errol Barnett, thank you so much.